Disclaimer. Stock trading is inherently risky and the users agree to assume complete and full responsibility for the outcomes of all trading decisions that they make, including but not limited to loss of capital. Matthew, chapter 25 verse 14-30, For it will be like a man going on a journey, who called his servants and entrusted to them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug in the ground and hid his master's money. For today's video, we are going to talk about Trendline, what it is, how to use it in investing. The easiest way to describe certain data using a single line or curve is referred to as a trendline. When applied to a chart, a single trendline may help to provide a more accurate representation of the trend. A channel may be drawn by connecting the highs and lows of the price action with trendlines. The specific points that are used to draw a trendline as well as the time period that is being evaluated varies from trader to trader. A trendline is: traders construct trendlines, or trends, on charts to indicate the best fit of data or to link price series. After drawing this line, a trader has a solid notion of where an asset's value is likely headed. A trendline is a line drawn above or below pivot lows and highs to illustrate the general trend in prices. Support and resistance may be seen in the form of trendlines across all time horizons. They reveal the course and velocity of price movements and provide light on price declines. For technical analysts, the trendline is a crucial tool. Technical analysts focus on spotting patterns in price movement rather than analyzing fundamentals like a company's track record. Technical analysts may ascertain the trend in pricing with the use of a trendline. According to technical experts, the trend is your ally, and seeing it is the first step to executing a profitable trade. Trendlines are relatively easy to use. A trader simply has to chart the price data normally, using open, close, high and low. Below is data for the Russell 2000 in a candlestick chart with the trendline applied to 3 session lows over a 2-month period. Channels versus trendlines. What you need to know. A chart may have more than one trendline drawn on it. In order to establish channels, traders would commonly draw a trendline to link the highs during a certain time period, and another to connect the lows. Support and resistance may be visually represented for the time period under consideration by using a channel. Traders use several trendlines in the hopes that one would break, or break out, the price movement from the channel. Depending on how their trade is set up, they may utilize that breach as an entrance point or an exit point. Technical traders are the ones who most often make use of trendlines. Any trader or investor may use trendlines to better understand the movement of a stock, commodity, currency, or any other financial instrument. What is the difference between the various types of trendlines? There are a lot of distinct categories of trendlines to choose from. Linear, logarithmic, polynomial, power, exponential, and moving average are the most prevalent types of functions.
That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also follow us on our Facebook page to learn more about the stock market.